and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao, and as always, I'm here to help you navigate the trading day with actionable strategies, sectoral trends, big news developments, and most importantly, your queries during the show. So please keep those comments coming. We'll have them addressed towards the latter half of the show. But let's kick start now and see what the global handover looks like. The Fed Reserve raised rates by 50 basis points, taking them to their highest level in 15 years. Chairman Jerome Powell indicates the fight against inflation is not over, says the Fed will stay the course until the job is done, as it expects to hike rates up to 5.1% in 2023. Indices correct up to 0.25%, discouraged by a longer than higher expected rate hike cycle. Stocks in Asia Pacific open largely lower after the Fed raises rates and signals more hikes in the coming year. SGX Nifty also indicates to a weak start for the Indian market. And yesterday, the European stocks were muted as global markets digested inflation readings and ahead of the Fed Reserve policy from the US. Stoxx 600 closed flat, reversing an earlier decline of 0.5%. US Fed sticks to street expectation of a 50 bips rate hike, but adds that no rate cuts should be expected in 2023. As US continues to battle inflation and remains decisively hawkish, how will our markets be impacted by that? Also, stocks in focus today are IRCTC, Poonawalla Fincorp and JB Chemicals. All right, let's get going and bring on board my colleague Aparna Iyer from Moneycontrol to talk about Fed's rate hike decision and more importantly the commentary. Aparna, hi, morning. 50 basis points was largely what markets world over expected. But let's talk about the hawkish and aggressive tone of the FOMC, and they're saying that there will be no rate cuts at least in 2023 for sure.
Good morning, Karunya. So yes, especially after the US inflation data that came out last week, there was expectations building up in the market that the Fed would be more, it will have a more softer stance, and the Fed pivot was expected in the next year. But clearly that's not coming. Fed Chairman Powell was very clear that the battle against inflation is not won, and he said as much as that we wish that there could be a painless way to do this, but there is not. What this says is that the Fed will continue to keep raising rates, and the dot plots now suggest that the peak Fed funds rate is going to be 50 basis points higher than what the September dot plot suggested. So clearly we are seeing the journey towards a higher interest rate and probably a longer time of elevated interest rates in the US. Secondly, the comments from the Fed chair and the accompanying statement has been very hawkish indeed. So one thing is clear, the US will see high inflation, increased unemployment, and low or probably no growth next year. But the Fed seems to be comfortable with that. Surprisingly, the markets, of course, have reacted. They have digested to this hawkish turn in the Fed's commentary, but the reaction has been largely muted. If you see overnight the US stocks, they've ended weak, but there hasn't been a dramatic fall. Asian stocks are down as we speak, and we would see a similar reaction at our markets as well.
Okay, Aparna, just when the markets started getting slightly optimistic about inflation numbers, whether it's India CPI or the numbers we saw from the US. Now, once again, Jerome Powell giving such aggressive commentary. Could it make markets more jittery, even our own markets, not just today, but in the coming few weeks also? Do you see some amount of caution once again spreading?
It's likely, but Karunya, just see the reaction of the markets immediately after the Fed's statement and the rate hike. So, of course, rate hike was expected, and they did 50 basis points. The dot plots are hinting at a higher pain than the market had expected. But there is a fair chance that the markets will shrug this off over the next couple of months. And the expectations of a pivot could actually come back. Because one thing is clear, that the market is not buying into the Fed's statement that inflation has not receded to in a pace that the Fed wanted. What the market thinks that inflation is going to come down faster, it will be much more comfortable than what the Fed is expecting. When we come to our inflation and our monetary policy, I think there are a lot of other factors at play here. The Fed is just one input, as we know. We have the budget coming in February. We have to see what kind of measures the finance minister announces and what that has in store for the markets. But for now, I think on the immediate basis, markets probably might shrug it off, or they will just wait it out as to how the Fed's policy plays out.
Okay, so now what happens to our own central bank? Now, largely we have been mirroring what's happening in the US, economy and US Fed Reserve. So let's talk about the kind of rate hike now we should expect in the next MPC meeting, and not just in the next MPC meeting, because that's something the markets are already sort of prepared for, but in the next year, because again, could we also see something like this, a rate hike across 2023 perhaps in various tranches?
So it's in the case of the RBI, it's interesting because within the Monetary Policy Committee, there are two members who have dissented the stance and also the rate hike in December. But the expectation is that the peak repo rate will probably be 6.5, and then the RBI will pause. So if you're asking me about 2023, yes, there will be rate hike from the RBI. And then probably there will be a pause. But there are also expectation that in the second half of 2023, we could see a pivot from RBI, but that will completely depend upon how our inflation pans out. Fed, as I said, is an input and is something that governs the external sector from which we might face some headwinds in terms of the currency, in terms of flows. But if we go back to what Governor Das said, he mentioned he has the Arjuna's eye on inflation. So we can assume safely that would be the main and the central point of how the RBI reacts next year.
Okay, so I'm sure our viewers want to know one bottom line answer to all things equities, because we have managed to outperform most markets quite smartly. Our macro indicators are not as bad as of now, at least. So can this outperformance continue? What are experts, economists and market watchers saying?
So from what we gather so far is that 2023 is going to be a strong year for Indian equities. There is a lot of positivity, understandably surrounding the financial sector, banks and even non-bank lenders as well. What analysts see is that there is still, despite the run up that we have had, there is still scope for the Indian markets to perform strongly, because valuations aren't extremely expensive or very uncomfortable, especially when it comes to the banking sector. Most of the sectors that have contributed to the rise this year might continue to do so next year as well. Like I said before, a lot of this depends on what the government announces in the budget too. So far, the government's measures have, we have discussions about the PLI schemes, how growth is being quite strong and robust and becoming more broad-based. So there is a general positivity when it comes to Indian equities, yes. Probably the one headwind that we may face is from the flows perspective. That is still unclear, whether next year will bring us flows, to what extent, and whether we would see comfort from that end. Now that is something that's entirely out of control of the RBI and the government here.
All right, Aparna, thank you so much for taking time out and joining us this morning and helping us understand how things are likely to play out for our own macros as well as our own equity markets. Okay, talking about markets, I think it's time we touch base with our technical expert, Chandan Taparia of Motilal joins in to give us his observations of the markets and different stocks. Hi Chandan, morning. How weak is today's session, or rather at least today's opening, going to be for us given the weak handover from most markets?
Good morning, Karunya. So overall setup of the Indian market is positive. We have seen good recovery in last 3 trading sessions after a small decline of the previous week. We need to understand that overall setup is positive, and in between any decline happens, that is being bought smartly in the Indian market. On last trading session, there was the outcome from the Fed meeting. So because of that, Dow was down and we are expecting slight gap down opening. But I believe that trend is so intact and the base of the market is shifting higher that overall undertone could remain intact to positive. So recently the index has corrected from 18,887 to almost 18,350 marks. That is 23.6% retracement of the entire uptick which has recently market seen. So I believe that if index open negative goes near to 18,580-600 zone, that will be the buying opportunity with support of 18,442. And we are again looking for an uptick to us 18,750 to 18,881 in the Nifty index. Now, if I talk about the Bank Nifty index, the Bank Nifty is one of the strongest setup, which is continuously moving upwards from last 10 consecutive weeks. So week on week basis, Bank Nifty is hitting to the new high as well as hitting to week on week basis positive gains. So overall setup is positive, and we believe any decline to us 43,750 could be bought with support of 43,500, and here we are target to us 44,250 to 44,440 level. Now, why we are positive even after the market dips in the morning? That is because of the lower India VIX. The volatility is hovering near to 13. Put call ratio for the index is near to 1 level. So all such data setup indicates the decline to be bought, and overall trend setup is positive, and that's why we believe that this dip could be utilized for the buying interest in the Indian market as well.
Okay, that's an interesting take on the markets, and I hope our viewers are taking note of that. Chandan, I want to understand how some of these stocks in news are likely to react today. The first one on the list for us, and of course many people out there, will be IRCTC. Now, the government is looking to sell up to 5% stake through an OFS, an offer for sale. The floor price has been fixed at 680 rupees per share, which is nearly at a 7.5% discount to the price. Now, IRCTC, this is one stock that we, keep getting a lot of interest, a lot of queries on. So talk to us about how things are likely to shape up from these levels now.
Yeah, so in the last year, we have seen good run up in IRCTC. Stoxx has gone to 300 to almost 1280 level. But in last couple of months, we have seen some dips from higher levels. But recently it has been consolidating the range, and already the hangover of OFS was already there, and that's why the stock was not holding well beyond 770, 775 zone. Even if I look at the price structure, just 4 or 5 days back it headed to 742, drifted to 715. Even on the last trading session, the momentum was based on this. So I believe that some sort of stability or basing formation will be there, as OFS is near to 680, so that could act as a major support. So I believe that any decline if happens because of this lower price, so 680, 700 zone could provide the base for an uptick to us 740. So now the 680 to 740 or 680 to 780 will be the probable trading range for the IRCTC for next coming couple of weeks or months going forward.
Okay, all right. Let's talk about Poonawalla Fincorp as well, another stock in news today. They're looking to sell their housing subsidiary for 3,900 crores to TPG. The transaction will maximize shareholder value in the long term. Now, that's what the commentary is coming in as well about unlocking value for shareholders. Now, Poonawalla Fincorp saw a good bounce in the first 1-2 weeks of October, but since then it has largely been range bound. So, talk to us about Poonawalla Fincorp and its technicals, how they're poised.
Yeah, so Poonawalla is one of the strongest setup if you look at the overall picture of last 2 years. In 2021, the stock has rallied well from 40 rupees to all the way to 230. And in this year also, we have seen a run up from 200 to 343. And now it has been consolidating at the upper band of the trading range. Some consolidation is visible, but I believe this consolidation is quite healthy looking at its delivery statistics. On weekly chart, it has been respecting to a rising trend line. Even on lower time frame, it is forming a small triangle. And I think this news trigger can give the pop-up on the upside, which can probably take it to the higher zone. So recently it made the base near to 290, 285 zone. So that could act as a major support. And probably we are looking for an uptick to us 325 to 340 in Poonawalla. That is handsome 10 to 15% upside from current level to go with the positive stance on the counter.
Okay, all right. Quite optimistic then the view looks like on Poonawalla. Let's move on to JB Chemicals. They're looking to buy Glenmark's cardiac brand Razel for 314 crore rupees. And with this particular acquisition, they will be making an entry into the statin segment. Now, by the looks of it, it looks like a positive development for JB Chemicals. But will the chart also, or will the technicals also play along? That's the question.
Yeah, so technically, if I look at the monthly chart of the JB Chemical, it formed a pole and flake pattern, and 2 months back it gave the breakout. However, from last couple of weeks, it has got stuck in a range, especially from last 4 to 5 weeks. But even after that, it is finding multiple support near to 1900, 1950 marks. So I believe that that support is intact, major trend is intact. The stock has been moving up fast from year-on-year basis from last 4 years. So there is no doubt about the major trend, but short-term trend is consolidating. So there are two ways. Either if it declines, then one can use the support near to 1900 to buy the stocks, or wait for a consolidative breakout about 2070, 2080, and in that scenario, it can go to as 2300 kind of level. So overall positive setup, but looking for some dip or consolidation breakout to play the positive stance of the JB Chemical.
All right. A lot of queries and questions also coming in, and we have lined up a few for you, Chandan. So let's get going with that. Shweta is asking your view on Eicher Motors. How is Eicher looking on the chart?
So if we talk about Eicher Motor, this stock has seen some decline because Nifty Auto Index has also corrected from highs in last 4 or 5 weeks. Eicher Motor has corrected from 38.89 to all the way to 32.40, 32.80 kind of zone. But from last 4 or 5 days, it has been forming the bottom, and there is some positive divergence and the positive crossover on the mechanical indicators. I believe that overall trend was positive and recent profit booking is now done, because in the last month it has formed very engulfing. This one also it witnessed some corrective move, but now on daily chart it is forming the base. On weekly chart it is negating the lower top, lower bottom. So all such data setup suggests that 3280, 3275 could act as a support, and stock can see the pop-up towards 3500.
Okay, all right. The next query is on Carborundum. Now, this is one stock that we don't discuss very often, but it's seen some interesting moves last 1 week. Is that upward trajectory sustainable?
So when you talk about the name of Carborundum, this stock is in radar. However, less momentum happens in the stocks. But in last 2-3 weeks, we have seen good run up from the lower levels. However, on the last trading session, it witnessed some corrective move, but major trend is positive, as on weekly scale, it has been forming higher highs, higher lows, and supports are shifting higher. So recently, it has surpassed the hurdle of 860, 870 zone. So I believe that could act as a support. And on uptick, we can see a move towards 925 to 940.
Okay. Want to address a PSU bank stock as well. Prashant is asking for your view on Union Bank. He bought 3,000 shares at 96 rupees, asking if he should exit at the current levels. I think it's still at those 94, 95 rupee levels. So there's completely no profit or loss here actually that he's making, maybe a meager loss. But let's talk about the 50% up move that Union Bank and many of the PSBs have seen last 1 month. So do you think it has more steam left from these levels wherein our viewers should perhaps be more patient and stay invested?
See, overall, we have positive on most of these PSU name, especially the mid-cap PSU like Union, UCO, Maharashtra Bank, CSB, CUB, even heavyweights like SBI. But advice is better to shift into the heavyweights name. Already the stock has seen a good run up from 34, 35 to now near to 95 levels. However, still those who are holding suggested to continue with trailing support. We have trailing support near to 82, 83. Upside we have target to us 110. But one need to understand that already stock has seen the good run up. and risk reward ratio might not be favoring after the strong run up of more than 100% recently. So, but if those who are holding can continue, but if someone wants to take new, cannot buy all the quantity at time, can start with a small quantity, use any dip if that happens to add more. So this is how one need to apply. So there is no doubt about the trend and the momentum, but here money management and position sizing need to take care for such kind of volatile and strong momentum counter in the market.
Okay, all right. I want to flag off Zomato. I mean, these are some of these, new age tech companies, Zomato, Paytm, Nykaa, they keep reoccurring on our feed day in and day out. I know there's not much of a historic pattern to track here for Zomato, but any indication or any view that you'd like to share with our viewer? Jitendra is asking us about Zomato.
Karunya, I remember last time you asked about a couple of these names, including Zomato and Paytm, right? So if you ask about the recent listing name, then I can only focus on the Bikazi, right? But if you talk about the Zomato, this stock has been consolidating a range. The absence of buying is clearly visible, but the good part is it is not falling as well. If I look at the price structure of last couple of weeks, on downside, we have multiple support near to 57. On upside, we have hurdle near to 70, 72. So I believe such kind of range could be there. If someone can play the range, that is the best suitable advice for anyone to trade the recent price setup of the counter.
Okay, all right. The next query is coming in from Hari. He wants you to address Indus Tower stock. Can you shed some light on the technicals?
Yeah, so when you talk about Indus Tower, IndusInd Bank also we like, just to aid. Indus Tower, if you talk, this stock is more on the range bound bias. I've never seen major momentum recently in last more than 90, 100 days. It has been hovering in a broader range where it declines, then recovers, and has been hovering and finding the support-based buying, but absence of buying is always missing in the counter. On last trading session, we have seen good recovery with support of 192. So one can apply the support of 192, can place some uptick, but not beyond 208 levels.
Okay. Suresh is sending us a lot of queries back to back. They're all on CDSL. So if you could address the stock for us. It's, again, one of those range-bound slow movers in the recent past. But do you think at 1200 levels one should dip in?
So when you talk about CDSL, one can focus on MCX if you are really looking for immediate move as well as momentum in the market. But when you talk about CDSL, stock has lost its charm and momentum. However, long-term story remain intact. But the stock used to in different scenario earlier. When I talk about in terms of the momentum, I remember from April 22 till December 21, the stock was in totally in bull trend. But now that scenario is missing, and we cannot ignore the range-bound bias of the counter. So if someone is looking for investment, definitely can go with the same. 1100 is the major support. Positionally, we can see target was 1350. But on trading point of view, it's very tough to comment because the stock got stuck in a range. But yes, MCX, if someone is looking, can target for 1750 to 1800 kind of level.
Okay. One last query, Chandan, I want you to address. This is from Vimit, and he's asking about Grasim. How's that stock holding up?
Yeah, last but not least, cement stocks are in focus. Grasim is one of the strongest counter. However, the beta is comparatively lower, but trend is intact. As of now, the lifetime high of the stock is 1929, and it was made in the Jan 2022. Right now it's trading near to 1820, just 100 points away from the lifetime. So just hovering near to the lifetime high territory, away by 5%, and we believe this lifetime high could be tested very soon because of his overall major trend. So I think one can continue to stay invested in the counter. On immediate point of view, 1760 is the support. We are looking for 1920 to 2000 on positional point of view in the Grasim.
Okay, all right. Chandan, what are your stock picks right now in the market? Which stocks do you prefer?
Yeah, so like I'll prefer more into the banking, financials, selective defense name, selective counter, including MCX. And also, let me first talk about the name inflow. First, it is buy on SBI. We have positive view on the most of the PSU name. SBI is one of the strongest counter. If I look at the daily chart, it has given a consolidation breakout of last 22-25 trading session, trading at its lifetime high territory, one of the strongest setup, including margin of safety. So recommending to go long on SBI with a stop loss of 16, looking for uptick to a 645, 650 level. Bharat Forge is the other name where we have positive bias. One of the strongest name, given a consolidation breakout, even a pole and flag breakout on the weekly and the daily frame, given a decisive hold above 888 level. So I believe that 880 could act as a support. You can see an uptick towards 950 level. So SBI, Bharat Forge are the two names one can keep on radar. And apart from that, MCX and Polycap are two more names where we can see 3 to 5% uptick from the current market.
Okay, all right. So SBI and Polycap top picks for Chandan Tuparia right now. Thank you so much, Chandan, for taking time out then and joining us this morning on the show. With that, we're out of time, so it's a wrap from our end. Thank you for tuning in.